Selling AMD today could be a huge mistake. In today's video, I want to touch on a couple of comments that were mentioned by an executive of AMD last week during a conference, numbers from TSMC, some gaming reviews, and well, the state of AMD at the moment. Now, of course, AMD got its nickname Advanced Money Destroyer because, well, guess what? If you did buy a year ago, well, you're basically cut in half. It's down 50% since then. But as I've said plenty of times, AMD had no business being close to $200 a year ago. Of course, sentiment back then was much better because the stock went up. The stock was supposed to be the next Nvidia. Today, at $100, although the business is doing much better, it's suddenly the next Intel, which is quite hilarious to me. Right now, if we look at some valuation metrics, PE, the last 12 months, 100. So everybody's saying, oh, super expensive. But I'm not buying AMD for what happened the last 12 months. I'm buying AMD today for what's going to happen in the next 12 months and in the next couple of years. So if we look at the forward PE, that's at 21.3 times. And for a company that's expected to grow quite rapidly in the coming years, I think that's a good price to pay. Now, of course, in the short term, a lot of things can happen. We can go up, we can go down. Volatility is to be expected. In the long term, with the product portfolio that they're having right now, if they execute correctly, I think that $100 will be looked at as an extreme bargain in a couple of years. Of course, I'm biased because I own it. I'm also down 7-8% at the moment on my position, which I'm fine with that, still building up my position. But if you're new here, that's basically it. I have a position in AMD and I'm currently down 7 to 8%, full disclosure. Now, before continuing, if you enjoy this type of videos, hit all the buttons, would really appreciate that. Closing in on 90,000 subscribers, can you believe it? And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. First up, do want to touch on the numbers from TSMC for the month of February. So as you can see, month over month, it's down 11.3%, but year over year, revenue is up 43.1%. If you look at the units, that's also up 39.2% year over year. So all in all, still quite good. Moving back to AMD, currently the average analyst price target sits around 50% higher than the price we're at today. Looking at some valuation metrics or pricing metrics, forward PE, EV to sales, EV to EBITDA, you can see that it's all lower than its 5-year median. Now, of course, when looking at AMD, especially in the last couple of years, especially free cash flow, you can see that free cash flow was all over the place and, well, close to nothing in 2019, 2020. But if you look at what's expected in the coming fiscal years, well, free cash flow is expected to grow quite rapidly. Actually, we're going to go from $2.4 billion in free cash flow in 2024 to $6.7 billion in fiscal 25 and reaching $11.32 billion in fiscal year 2027. Of course, these are analyst expectations, and expectations can change. Now, as I said in my last video, of course, the whole focus is on AI revenue, is on data center. But I did talk a little bit about the gaming side of things, especially the fact that AMD in the last 2 years have lost market share to Nvidia when it comes to the gaming market. Now, it's not that important, of course, all things considered, but $1 billion here, $1 billion there for a company like AMD could move the needle. Why am I saying this? Well, because if we look back here, 2023, the peak, gaming revenue was $1.7 billion. Today, we are $1 billion less than that. Last quarter, $563 million. So imagine if suddenly we have a segment like gaming that could add another $1 billion to the top line. For a company like AMD, which generated last quarter $7.65 billion, an extra $1 billion is quite a big deal. Of course, for a company like Nvidia, who generates close to $40 billion, not such a big deal. But for AMD, I think it is. Second of all, the embedded side of things, right? Xilinx, embedded, $1.56 billion at the peak here in 2023. Currently, $923 million. So here as well, if we can add another $500,000 here, that can help the overall business, especially since the embedded business is a high margin business. So I'll keep repeating the same thing again and again. Of course, the whole focus is on AI revenue on data center because, well, as you can see, that's the biggest chunk of operating income, also the biggest chunk of revenue. But they still have the other sides of the business that are going to help push revenue growth higher and EPS higher as well. Don't forget that. Now, last week, AMD released their Radeon RX 9070 and 9070 XT. Verdicts, reviews across the board, most of them are very, very positive. Of course, there still is that issue, and they say it here at Tom's Hardware, concerns with retail availability and pricing. A lot of demand, not enough supply, which not great for the consumer, pretty good for the company because that means that it's sold out. We've also had an interesting comment from an unexpected corner. Now, remember a couple of weeks, maybe 2 months ago, I touched on the fact that Tiny Corp, which is founded by George Holtz, which is the founder of Comma AI, he was quite critical of AMD and especially AMD's software side of the business. Now, look at this. This was a tweet from back in January 2016. If this isn't worth $200K to AMD to send us a few boxes, I don't know what to tell you. Cultural test to see if AMD can invest in software. If not, why should I waste my development time on the MI300X? This was back in January. Then, this was a post that they released, I think, a couple of days ago. It took a bit, but AMD passed my cultural test. I now believe they aren't going to shoot themselves in the foot on software, and if it's true, there's absolutely no reason Nvidia should be worth 16 times more. Now, when I read that, I'm like, quite a nice comment. But then you had to continue to read here. So, CUDA isn't really the mode people think it is. It is just an early ecosystem. Tiny Corp has a fully sovereign AMD stack, meaning we have rewritten the full stack from the hardware to PyTorch, with exception to LLVM, and soon we'll port it to the MI300X. You won't even have to use TinyGrad properly to use it. TinyGrad has a Torch frontend now. Either Nvidia is super overvalued or AMD is undervalued. If the petaflop gets commoditized, that's basically the mission here of Tiny Corp, the current situation doesn't make any sense. The hardware is similar, AMD even got the double throughput tensor cores on the RDNA 4, Nvidia artificially has this on their cards, soon market pressure will force them not to. And so, what do we see here? I'm betting on AMD being undervalued and that the demand for AI has barely started. With good software, the MI300X should outperform the H100. Of course, we already have the H200, going to have GB200, Blackwell Ultra, then next year Rubin. I know that. AMD will also have the MI350, MI355, MI400 next year, etc., etc. So the last thing here, and that's a bit strange to be honest. He posts here a screenshot that he bought $250,000 of AMD shares for the long run. It can always dip short term, but check back in 5 years. Now, I've been critical of him before, going out and making those statements. I'll be critical here again, even though this is quite bullish for my thesis here. What's also interesting is that they got Intel GPUs, and not the small one, the big ones. I mean, they got 2 of them. These are the big ones. This is a bit of a smaller one. They said here, turns out Intel does make big GPUs. These are the specifications, and this is the smaller one. It works. They're working on it to make it even better. So quite interesting, to be honest. Moving on to a couple of comments that were made last week during AMD's Morgan Stanley Global TMT conference. Who attended that? Matt Ramsey, Investor Relations, and Jean Hu, EVP, CFO, and Treasurer. So if you watched my portfolio video on Sunday, you already know what I'm going to say. But if not, this was basically the big points that they touched on. So MI350 launched mid-2025. So that's great. MI400 for 2026 should be able to compete with NVIDIA's Rubin. Now, of course, the success depends on the roadmap execution, customer engagement, and leveraging ZT Systems. I think the acquisition of ZT Systems is really going to be felt with that MI400. On the other side of the business, server business gained market share, 5 to 6 points in 2024, with Turing platforms TCO benefits. TCO, for those that don't know, that's total cost of ownership. On the client side of things, which has also performed quite well, that saw strong growth fueled by Ryzen 9000 desktop and Ryzen AI 300 notebook portfolio. Just so you know, the client and the gaming segment, when they're going to report their next quarterly figures, it's going to be in the same segment. So you're going to have data center, client, and embedded. They said the embedded segment has shown recovery signs with strong design wins. In 2024, they had $14 billion worth of design wins, which is great for the long term. Gaming is rebounding with the new GPU launches. Of course, for Q1, you're only going to have that 1 month of that quarter. They talked a little bit about the AMD GPUs versus ASICs and competition. So a bit like what NVIDIA has told us before. So AMD's positioning of the GPUs as high performance, flexible, and programmable. Unlike rigid ASICs, GPUs offer better TCO over time due to adaptability to evolving AI models. As for the ecosystem, they talked a little bit about ROCm software stack that is a strategic advantage, supporting diverse frameworks and cloud providers. ZT System Acquisition enhances rack and cluster level design capabilities to large-scale AI deployment. And of course, that allows them to focus on tailored system design. And it's all about not just, oh, we're releasing MI300 or we're just releasing MI350 and then MI400, and those are 3 separate things. No, if you have that good software stack, just like NVIDIA with CUDA, you're building a roadmap with your customers. And I think that's what we're going to see with AMD going forward. And I fully expect them to, for sure, grow with the market and maybe even take some market share. That doesn't mean that NVIDIA will do badly. No, NVIDIA has around 90% of the market right now. So wouldn't really surprise us if they lose a percent here or a percent there. And so to come back to the main point, I think selling AMD today at around $100 is going to be a huge mistake. Not only do we have momentum with the data center side, not only do we have momentum on the client side, but we're going to get some momentum from the gaming and the embedded segment as well in the upcoming quarters. And I think, just like management has told us, that the product portfolio today is stronger than ever before. And we're going to see that product portfolio become stronger and stronger over the next couple of quarters and the next couple of years. Of course, if you don't want to hold it, that's up to you. Right now, if we look at the weekly, of course, it doesn't look great. We're under the moving averages. We're also under that uptrend line here. We'll see what happens this week. RSI is very low on the weekly. Right now, pre-market, we're at $98.4. Let's see what happens on the daily. On the daily, we were oversold last week. Right now, let's see what happens. Maybe we're going to rebound around those levels that we've seen last week. It's been pretty volatile, right? We've gone up, we've gone down. You can see some green, some red candles. So we'll see. But over the long run, for long-term investors, I mean, I'm a long-term investor, so those sometimes I do take positions for the short run, not gonna lie. But an AMD at current prices, current growth rates, I like it. And I like it very much, even if it goes a little bit under $100. I'm still building up my position, and I think this thing can go much higher in the future. So yeah, don't make the mistake. Don't make the mistake of seeing your position a bit down right now and then selling because, well, you can't handle it anymore. I think during red days, during corrections, that's usually when you start making quite a lot of money. Of course, not now, but you place your bets for the future. And in the future, you're going to look back at this time and say, was actually a pretty smart move to start building up a position this day. So anyways, that's all I've got for you right now. Like, subscribe, all of that. Share your thoughts down in the comment section below, and I see you all in the next one. Bye-bye.